Hi, I'm Keon, a research analyst with Lipper, and I'm here to speak to you about fund flows for the week ended Wednesday, February 4th. Let's start by taking a quick look at last week's market activity. Both of the broad market indices experienced strong returns for the week. The Dow Jones Industrial Average was up 2.8%, and the S&P 500 was up 2%. This came on the heels of down months for both of the indices. January 2015, the Dow was off 3.6%, and the S&P retreated 3.1%. This was the worst one-month performances for each index since January of 2014. A contributing factor to both the poor performance and the bounce last week was oil. January saw a continued slump in oil prices due to the oversupply. They hit 6-year lows during the month. And last week we saw a bounce in oil prices, as some investors speculated that the price may have found a bottom. And energy stocks, due to this, led the rally of the markets. Let's turn our attention back now to fund flows. Overall for the week, we saw aggregate net outflows of $2.8 billion. This data includes both mutual funds and exchange-traded funds. Looking at our macro groups, we see that equity mutual funds had net outflows of $1.5 billion for the week. Taxable bond funds, net inflows of $5.1 billion. Muni bond funds took in $422 million, and money markets saw $9.9 billion leave their coffers. Let's take a closer look at our equity mutual fund group now. As stated before, the group had $1.5 billion in net outflows last week. This marks outflows for 4 out of the 5 weeks of the new year for the group, for total outflows of approximately $4.1 billion. Breaking out last week's performance a little bit more, we see that the outflows were fairly evenly split between non-domestic equity funds and domestic equity funds, which had net outflows of $870 million and $608 million respectively. Moving on now, let's take a closer look at equity ETFs. The group saw $5.6 billion in net outflows last week. Similar to their mutual fund colleagues, they've had net outflows in 4 out of the 5 weeks in 2015. Although a little bit more extreme, they've had this information totaled $20.5 billion in net outflows for the group. Last week, ETF investors were selling the SPDR S&P 500, which had net outflows of $2.2 billion, and the iShares US Technology ETF, which had outflows of $1.2 billion. Let's take a closer look at taxable bond mutual funds now. As stated before, they had net inflows of $5.1 billion for the week. Conversely to the equity performance we just talked about, taxable bond mutual funds have had net inflows every week this year, for a total of $20.5 billion for the year to date. The big winners last week were funds in the core plus bond funds category. They took in $2.3 billion, and the high yield funds group also took in $1.5 billion. Let's take a closer look at taxable bonds ETFs now. Similar to the taxable bond mutual funds, had a big net inflow last week, a total of $8.6 billion. They've had inflows for the last 4 weeks for a total of $12.4 billion on the year to date. Three iShares Treasury products took in the bulk of the net inflows last week. It was the iShares Short Treasury Bond ETF, took in $2.0 billion. The iShares 7 to 10 year Treasury took in $1.3 billion, and the iShares 3 to 7 Treasury took in just over $900 million. Moving on to our next group, muni bond funds. Slow but steady here as usual. Muni bond funds took in $422 million on the week, their 5th consecutive net inflow to start the year. Total net inflows for the year to date, $3.7 billion. And once again, funds in the national muni categories leading the way here with net inflows of $464 million. Moving on to our last group now, money market funds. After the hot streak at the end of the year in 2014, where they took in quite a bit of money over the last month or so, they've had 5 straight weeks of outflows to start the year. Last week, as we stated, they had $9.9 billion in net outflows, which brings their year-to-date total to $39.1 billion in net outflows. Again, the main culprit this week was institutional taxable money market funds, which saw about $10.5 billion leave their coffers. Well, that wraps up this week's report. If you'd like to take a close look at the data, please join us at our website, www.lipperusfundflows.com. And please join us again here next week where another analyst will be speaking to you about fund flows and see what type of impact today's positive jobs report had on market data and fund flow data.